So we're going now to be expecting to see bearish movements to the downside. We've already established what we want to see from the weekly. We established the weekly perspective. We checked the daily, and I went further to look at the intraday time frame, which is a 4-hour time frame, and then clearly also to give us a picture of the 1-hour time frame. And then now we're in the 15-minute time frame, where basically we work with the concept of identifying these trading sessions. So this is going to be a very well detailed and extensive session, and I do not want you guys to really joke with this session. After the session is done, I'm going to make the video available in the drive, and you really have to go through it. The problem is you might go through some of this content once and you believe you want to assimilate the knowledge once. No, you would really need to revisit this contents, implement them in the chat till you gain mastery, guys. So let's dive into the chart now and begin to look at this perspective and how we can frame our entries using these sessions. So, since we've already established the weekly perspective that we're expecting bearish movement of price to the downside. So basically, we're just going to be looking at bearish movements. You get that would be the more solid trade setup you want to be anticipating. So you could decide to take buy moves when you basically understand these trading sessions. Do well to really go back to the schematic video, watch that till you assimilate this knowledge properly. So now what we can see, we've identified the daily high and the daily low point. So basically now we know that our drawn liquidity is the sell side drawn liquidity, is a sell side liquidity points, because we are expecting bearish movements. But within the daily dealing range, we're going to also have liquidities within that. So now we can clearly see that now we have the high and the low of the day. So, we're looking forward to the sell side liquidity to be taken out. So now we can see the midnight 12 a.m. hour of this daily delivery. We can see our price traded above that, return retest, price for the push to the upside, traded above the 8:30 a.m. and now we have the bearish fall once price mitigated the weekly fair value gap. I told you want to trade this power of three also with the understanding of your established directional bias and your sponsorship zone. So you can see here we have a market structure shift, because this is the last swing low that gave us this high. We can see this took out this liquidity, and now we can see we have this fair value gap, and in confluence we have this fair value gap. This is an inversion fair value gap, because price gave us an impulsive movement that created this fair value gap. And from the weekly time frame, we saw that this took out liquidity. So, for you to validate an inversion fair value gap, then it has to take out liquidity. So basically, from this dealing range, our zone is this fair value gap we were looking forward to, since also it is in confluence to an inversion fair value gap. So basically, we have established a strong confluence, a strong sponsorship zone, an inversion fair value gap, and this fair value gap, because we had this displacement, further displacement, market structure shift. We can see here we have this buy side liquidity, we have our inducement liquidity here. So we could see price for the push into the zone before we frame the bearish movement to the downside. So we're going to play price to see the delivery of price. So let's play price to see. Now all we can see is that prices, now we can see clearly now we are in a new day. The Asia session begins the new day, but basically, we're working with 12 a.m. as the beginning of a new day. So now we can see this is the Asia session, and we want to see the delivery in the Asia session. Basically now, before the Asia session open, we identify the possible draws on liquidity within this daily dealing range. We have this buy side liquidity. We want to see price seek the buy side liquidity and then the bearish movement to the downside. So let's play price to see. Now we're still in the Asia session, and what we can clearly see is that the Asia session gave us a bearish movement to the downside, even took out the low, the previous day low points. But basically now what we have is now we identify the high and the low of the Asia session, because I told us that oftentimes London session help us create the high of the day and the low of the day. So since we are expecting bearish movement, meaning the high of the day have not yet been created, even though we can see here in the Asia session that price has taken out the previous day low points. Now what we can see clearly is that price mitigated this institutional order flow here in the 15-minute time frame. Let's check that in the 1-hour time frame. Now we can clearly see in the 1-hour time frame that price completely filled up this fair value gap, and we can see mitigated this open close price. Price mitigated that deeply into this candle week also. So now we can see now this is the Asia session that give us that bearish movement. So you can see clearly from the 1 hour time frame, if we're expecting to frame our bearish movement upon return of price, this is the order block in the 1 hour time frame, and above it we have this rejection block. But by refinement in the 15-minute time frame, we saw a fair value gap here, which is in confluence with an inversion fair value gap. That is a strong confluence. So now we can clearly see that this is a buy side liquidity. So price will seek this buy side liquidity before we have the bearish continuation, because you can see here we have this breakout block, because this is the down close candle before this for the bullish movement that took out this high point, took out this liquidity. So let's go back to the 15-minute time frame. So now we can possibly take a buy move here. Though this is you counter trading, you get it. This is you counter trading. That is just the truth. So for us to actually take a bullish move, then we could wait to see price violate this bearish order block. Price close above it to give us a change in state of delivery, because now we have a bearish market condition. If price should close above this bearish order block, then we have a change in state of delivery. So let's play price to see. Now we can clearly see this is the midnight hour, 12 a.m. So we have the open price. So basically we want to see price trade above that open price, since clearly we know that we are expecting bearish movement. So the London session should give us the high of the day, and then we have the bearish fall to the downside, and we clearly identify our sponsorship zone. So I told us that oftentimes the London session creates the low of the day or the high of the day, depending on the directional bias for the particular day and the weekly bias. So now we can possibly execute a buy move to the upside here. So we could set our buy order, and then looking forward to see price takes out this buy side liquidity. So, basically you just want to be targeting 1:3, and this is already 1:4.2. So we can just take our buy move to the upside. We want to see price takes out this liquidities, and then want to see price mitigate this fair value gap, and then we have our bearish movement of price to the downside. So this is the Asia session, give us a bearish movement. So we want to see the a return of price in the London session to create the high of the day. Since we have our sponsorship zone identified here, we can clearly see price mitigated this institutional order flow here. So now let's play price to see. Okay, now we can see we are in this bullish move. So let's further play price to see what happens. Okay, now we can see we are in the London session. So we are in the London session, and we can see that price took out this Asia session high point. We can see took out also this buy liquidity and also this buy side liquidity. But we've identified our sponsorship zone, and we're expecting to see price return to this fair value gap. So let's go to the 1 hour time frame. You have to be flexible with these time frames. So you can clearly see here in the 1 hour time frame, where do we have our breakout block? Here we have the breakout block. Price have not even mitigated this breakout block. So, this is the order block, and you can clearly see there's a rejection block here. But, within that order block, this up close candle before the bearish movement, we found another sponsorship zone, which is the fair value gap, which price has the probability of mitigating. So let's check the 30-minute time frame also. I told you have to be very flexible with the charts. So you can see here, we do not really have that. But what we can see here, we have the Quasimodo model, because we can see that price broke above this high point. We can see price broke above the high point, dropped to the downside, took out the low. So basically this is the model for the Quasimodo. You have price pushed to the upside, price fell, we have price pushed, but then now price came and took out the low. So we could see price return to mitigate this high that was broken, but then price fell and took out the low. So we could see price return and mitigate that, and then we have the fall of price to the downside. So this is the Quasimodo model. So you can see that is the high. So we could see price mitigate it, and then we have the bearish fall to the downside. I'm just showing you most of the things I look forward to establish in order for me to take some entries. I know the details, the information here might be so much for you. Anyway, so let's continue. So we can see now, this is the midnight open. Price have traded above that. We are in the London session here. So let's play price to see further. Now we can clearly see that price took out target area. So we have our take profits match. So we can just do away with this buy move. So we can see the Asia session gave us a bearish movement, mitigated this institutional order flow. Since we know we are expecting a bearish movement, I want to see price trade back into premium. Because when we use the Fib tool, let's do that. So let's make use of our Fibonacci tool. So we can see from the swing high points here to the swing low points we're identifying here now, where price gave us that bullish movement. So we can see price is at equilibrium, and we can see the fair value gap here is within the premium zone. So we can clearly see the possibility of price returning into that. So we want to take our sell move from that fair value gap, which in confluence is an inversion fair value gap. And our stop loss can just be above this week high, this open and close price. So we can set our stop loss above that. And then we can target this low point, the Asia session low point, because this is the Asia session low point. Price gave us this bullish move in the London session, took out the Asia session high. This is the Asia session low. So we could see price mitigate our fair value gap here, mitigate that, and then we have the bearish fall to the downside. So we're still in the London session. We want to see London session gives us the high of the day. Now we can see now for the previous day, 8:30 a.m., that is where price is at. So we could see price deep above that to mitigate the fair value gap, and then we have the bearish move of price to the downside. So let's play price to see. Okay, so we can see that the London session is giving us bearish movements. Why? Because price is reacting at the breaker zone. Let's switch to the 1 hour time frame. So we can see price reacted at that breaker and fell to the downside. But then since basically we use the 15-minute time frame to look more into that zone. And when you mark out, we want to see the volume of this bullish order block. We want to see the 50% of that. You can see that our fair value gap is within that 50% of the volume of this bearish order block. So we could see the possibility that price could return and mitigate that, because this sponsorship zone is also giving you a rejection candle. So let's go back to the 15-minute time frame to see what happens to price. You see, I'm taking you guys through the details bit by bit. So now let's go to the 15-minute time frame. So now London session is giving us this bearish fall. So that is why I told us we could see the possibility that London session may not give us the high of the day or the low of the day. That may be created during New York session. So that is the possibility we could see happen here. Since now we can see that that did not mitigate our zone. So let's play price to see what happens. Now we can see we are in a New York session. This is a New York session now. And you can see this is the 8:30 a.m. New York time zone. You know, I told you if we're expecting bearish movement, then price should trade above the 12 a.m. and also the 8:30 a.m. So you can see this is the open price. Price traded above that, mitigated the sponsorship zone in the New York time zone, creating the high of the day, took out London high points. And now we are seeing the fall of price to the downside. So now if you miss to take an entry here, upon price giving you more movement to the downside and closing below the low of this candle, because here you have the last down close candle before this bullish movement that swept the London high, mitigated our sponsorship zone. So you could take another entry when you see a valid body candle close below this low, when you see a change in state of delivery here. So let's play price to see. Now we can see clearly here that we have this candle closed below the body of this down close candle before this bullish move. So you could execute another entry there. So let's minimize this and look forward to how we can place that to show. Now we have that change in state of delivery. So you can possibly now also consider to fix another bearish movement, another bearish position here, and the stop loss will be above this fair value gap here. So you know, we'll be targeting the same low points. So let's play price to see how this is going to deliver to the downside, because you know, where is our target? This sell side liquidity, and in extension this sell side liquidity. So let's play price to see. Now we can see also price return activated our order, because we have a change in state of delivery here, a market structure shift, because price have mitigated our sponsorship zone. So let's play price further to see. Now we're seeing the bearish continuation to the downside. Let's follow play price to see